Today on Ask Money Talk, we answer a question we're hearing about investing during times of ongoing market uncertainty. Brad Simpson, Chief Wealth Strategist, TD Wealth, joins me now to weigh in. And Brad, here's the question for you. How should I approach my portfolio given the uncertainty and geopolitical risk right now?
Well, I think first is that you just have to accept that we live in an environment and world today where there's a lot more geopolitical risk, and knowing's half the battle. I mean, that's the starting point. I think the second part of that is that we have to know, even in the short term, we have a market that is really being driven by events, and it swings from one event to another. Again, knowing's half the battle. And I think on the third one is that you got to build with knowing. You just got to keep calm, diversify, and if you do that, it's going to make a big difference.
What does it look like from a portfolio construction point of view? People, I think a generation grew up with a 60-40. 60
right.
Equity, 40 bonds, you're going to be all right. The world's different now.
It is different. So, I think a really important step for investors to be diversified. But then you got to stop and ask yourself, well, what does that mean? There's no givens anymore. And so, meaning that I can just own a stock and bond portfolio. When you want to have diversity, you want investments moving at different times in different ways. Increasingly, we are seeing stocks and bonds move in the same direction. So what we want to do is add more breadth to how we're allocating. One of the great ways to build that diversity with geopolitical tension, owning commodities. Commodities is actually one of the best diversifier for geopolitical risk. And the good news is a lot of wealth investors are underallocated there. And so we think that makes an awful lot of sense. Second area that makes that people can implement hedging strategies into their portfolios, which we do a lot of. And again, a lot of wealth investors, institutions do an awful lot of it. Wealth investors, many don't. And that's another really great diversification strategy to do. And a third one is adding infrastructure and real assets into your portfolio.
Those alts we keep hearing about.
Yeah, the alternative investments and there. So yes, be diversified, but know that there's a new standard of diversification, and it's adding those commodities. You adding the alternatives with the infrastructure and real assets. And we think that makes an awful lot of sense.
Quickly, I'll ask you, people get obviously nervous in times like we saw in the big sell-off in April. Staying invested, how important is that?
Because ultimately when you look at those short-term things that happen, we believe that there's two parts that make a successful investor. One is having a wealth plan. And most of the time when you have a wealth plan, you usually have time horizons. And those time horizons usually are somewhere between, let's call it 1 to 2 years, is to fund short-term needs. Let's call it 3 to 5. In that 3 to 5 years, it's funding stuff that you're going to want to do then. That's a longer-term time horizon. And so there is where you're going to take more of your risk investments on. And the third one is your long-term, which is going out 10 years, where you can do your more aggressive growth strategies.
Brad, always great insights. Thanks for joining us, my friend.
Thank you.
Brad Simpson, Chief Wealth Strategist, TD Wealth. And look for Brad's latest Portfolio Strategy Quarterly Report on his LinkedIn page. You can also send your questions to us here at moneytalk@td.com.